Welcome to the Money Tips No One Told You podcast. I'm Heather with First Pioneers Federal Credit Union, and I'll be your host. At First Pioneers, we're dedicated to caring for our members' financial needs with heart, and that means providing more than just financial services. It's about empowering you to take control of your financial destiny through knowledge and understanding. This podcast is all about guiding our listeners toward a brighter financial future. So get ready to embark on a journey towards financial well-being, because at First Pioneers, we believe that when our members are financially successful, we all succeed. Stay tuned for a wealth of knowledge and inspiration. Last time we talked about the cycles that people tend to get caught in with their finances. One of them was the courtesy pay cycle, or overdraft protection. I guess depending on where you bank is what you call it. And that's what we talked about in the last episode. You can check that one out if you haven't already. The other one was the payday loan cycle, and that's the one I want to go over this time. And I tell you, I learned a lot actually when I was doing the research for this episode. And it really, I feel like it can be quite devastating when you get caught up in this cycle. It seems like a really difficult one to get out of. So let's start with what is a payday loan. And you may hear it called a cash advance, a deferred deposit, and things like that. But the long and short of it, it's a short-term loan. I don't even know that there's a true definition, because I feel like they sort of vary a bit depending on who the lender is and even as far as the state that you're in and the regulations and whatnot. Typically, these are for, $500 or less, and they're going to be due to be paid back on your next payday along with your fees. You're going to see people that market them as a great way to bridge that gap between your paychecks, or if something comes up, something unexpected. It's also an unsecured loan, which means there's no collateral needed to take it out. And that also means that it usually has a really high interest rate. And when I say high, y'all, some states actually cap the interest rate, but even with that cap, there are some rates that are as high as 36%. I was floored when I saw that number. Now, to get a loan like this, you'll most likely either write a post-dated check to the lender. I'm not sure how often they do that anymore, but some people still do. Or you're going to authorize them to electronically debit your account. So they'll be able to just electronically remove the money. And like we said, they're usually then due to be paid back on your next payday. Now, that part may vary, but most pay periods are going to be probably 2 weeks, maybe 4 weeks. And if you don't pay it back by the due date with all the fees and interest, then what they can do is they can cash that check that you wrote, or if you went the electronic route, then they're going to draft that money from your account. So there are many people out there thinking, oh, this is great. What a lifesaver. That can help get me through between paychecks when things are tight. Okay, but the fees and those interest rates are actually making it really hard for people to pay that back. So they end up where they just keep delaying paying it back. They basically, I think some people say they roll it over, but you're essentially refinancing it, which means more fees. And here we are in the cycle that they're trapped in. Now, most states actually have regulations in place, and that limits how much these lenders can charge. But once you're caught in the cycle, that's when it's sometimes just difficult to get rid of. And y'all, it's so much money to pay back. It just adds up so fast. Let's see, creditkarma.com had an interesting example. They said, let's say you take out a 2-week loan for $500 that charges $15 for every 100 that you borrow. So now you take that and then you consider the interest rate as well, and it actually works out to almost 400% APR. That is insane. But just the way they put those fees and that interest in there, it just adds up, and it looks very different from the outside, but once you're in there and in it's just so much money. And so now you have all these fees and all this interest, and now you can't pay it back. So now you just kind of have all these fees and interest. So let's talk about if you can't pay it back. For starters, there could be even more fees. They could draft your account, and if you don't have the funds, they're going to be overdraft fees. Remember, we talked about those last time. The lender often charges a late fee, plus if that payment didn't go through, they're going to charge a fee as well. So now let's add this up. You've got a fee from the bank because the draft didn't go through. You have a fee from the lender, plus a late charge, plus the money that you owe them to start with. Then let's say you've said, okay, I can't pay this back, and you have to roll that amount over. Remember, we said that before. You roll it over, you refinance it to give yourself, longer. There's fees for that too. This is truly a no-win situation. How do you win out of this? So here are some ideas of some things you can do instead if you find yourself, needing money quickly, or, one of those unexpected circumstances comes up like we talked about before. These are some better options for ways to do that. At a credit union, there's often options for emergency loans. This is going to be a similar amount of money as you would from these payday lenders, but the interest rates are going to be significantly less. Okay, significantly. And there won't be all those additional fees. So the truth is, an emergency loan cycle is not really a cycle that you want to get caught in either, because that's still kind of indicating that there are some healthier budgeting options that may need to be looked at, but it is a better option than a payday loan. So that's something you can consider. There are some employers that will allow a payday advance, so it'd be an advance off of your paycheck, and they will do that with no fees if they're willing to do it. Now, of course, that's going to be up to the company and what their policy is, but it may be worth asking. A personal loan may be a good option as well. Now, of course, these are usually for a larger amount than, your emergency loans are, but they are still unsecured. So there is a limit to how much you can borrow, but you can always talk to your credit union and see what they can offer you. And again, those rates are going to be significantly less, and you're not going to have all those crazy fees involved. I know a lot of people that are trying to climb their way out of debt. This has been a really good option for debt consolidation, so that they can just pull all those debts together, make one payment, and get it all paid off. So that may be an option for you as well. And I actually know someone that got into the payday loan cycle. They were young, kind of just starting out, and trying to do things themselves. They were actually trying to be responsible and trying to be an adult. So they took out one of these payday loans to try to help them, get to the next paycheck, because I think an emergency had come up and they needed some extra cash. Well, they couldn't pay the loan back. And it ended up basically, it snowballed and just kept growing and growing and growing. And if I have the number correct, before it was all said and done, that $500 loan ended up being $8,000. So he actually said, you know what, enough of this. He went to his credit union and he was able to take out a personal loan, which of course, again, better interest rate. There was a plan for it to be paid off. He knew he could afford the note. There weren't all the crazy fees. And so he used that to pay off the payday lender, and did what he needed to do to budget and whatnot so that he could pay that loan off and get himself back on track. it just happened. It was just something that came up, and he did not realize just how difficult that was going to be and how much it was truly going to cost him. And this was someone who had, actually had a pretty good job and was bringing in some good money. Just something happened, like I said, that emergency, and it got him off track. So it is truly shocking how easily this can happen, and how, again, it seems like the right thing to do on the outside. But once you're in there, it can get you into trouble. Now, of course, we talked about a lot of these things last time in the last episode, and we've talked about it before. One of the biggest ways to get out of these cycles is to get help with your money management, to work on your money management. Create a plan to get this debt and other debt paid off so that you can live more comfortably. And again, you start with tracking your income, you track your spending, you get a real picture of your finances. Then from there, you create a realistic budget, one that you can stick to. Then what do? We all know this, show of hands, follow the budget. And of course, you're going to need to adjust your expenses where you can and increase your income if that becomes necessary. Sometimes this is going to come with making some hard choices and truly being committed to making those meaningful changes in your money habits to get you back on track. I said this last time, you may have to cut back in places that the truth is you'd rather not. Okay, we all admit that, but I don't want to give that up. It's fun. I get it, but sometimes it's what we have to do. And it doesn't have to be forever. If you can work on this and put some hard work into it and some discipline into it, then you know what? You can resolve these challenges and you're going to become more financially stable. And through doing this work, you will grow in how you handle your money. You're going to become more responsible about your spending. You're going to become a better manager of your money. You're going to be making more healthy financial decisions. And once you're there, then you can start looking at maybe adding some of those things back, or maybe adding them back in a different way that makes more sense. And look, I've said it before, none of us want to give up things where we feel like we're being penalized, right? But sometimes we just have to make those choices to be healthy. And that goes for our finances and, a lot of other things in our life as well, right? But change doesn't equal a life sentence, okay? Change is to make ourselves better, and it's a good thing. And you might be surprised what doors it opens, or how just thinking differently can truly change your life for the better. Now, before we get too far, I want to make sure I say one thing. I talked about debt consolidation with the personal loan. Be careful with the debt consolidation companies. We've talked about this before too. They generally don't work the way you think they will, and they actually can end up harming your credit. So I truly recommend check with your credit union, check with your bank, see if there's another option before you go that route. Really talk about that. And that's not just because I work at a credit union, and I'm not trying to badmouth anyone. I'm really not. But we've just seen some things happen with some of those companies where the debt ended up not getting paid, and it actually ended up hurting these people's credit. So just bear that in mind. Ask questions. Make sure you understand exactly what's happening before you sign on for something like that. Okay, so moving on from that. Again, finances aren't one size fits all, right? Everyone's journey is different. Everyone's challenges are different. Everyone's goals are different. But sometimes, just a little bit of help along the way can make a big difference. And we are absolutely here to help. Sometimes you just need that person that can help you get organized and maybe just see some things in a different way that will help you get moving in the right direction. We are happy to be that person. So reach out whenever you're ready. That wraps up another episode of Money Tips No One Told You. We hope you enjoyed the insights and tips shared today. If you have any questions, thoughts, or topics you'd like us to cover in future episodes, feel free to reach out. If you found value in today's episode, don't forget to subscribe, rate, and leave a review. Your feedback helps us tailor future content to better serve you. There are several ways you can find us if you need further information or need to speak with a financial counselor. Visit us in person in Lafayette or New Iberia, Louisiana, or at firstpioneers.com to find out how to become a member of our family and find other financial information. Also, be sure and check out the show notes for important links and important information. Your financial journey is important to us, and we're here to support you every step of the way. We hope you have a great day, and we'll see you next time.